So what you can see over here is that I have 1 hour candle, and inside the 1 hour candle I have 1 minute chart, and I have also 2 opens. I have the live candle open and the previous candles open. By looking the previous candle, if the previous candle was super bearish, right, let's say it closed with a peak body closure, so I'm expecting a pullback into the previous candles, either into the open or inside the body, and then usually I look for the continuation, right? We closed with a huge wick and we swept lots of lows, right? We cleared up some of the liquidity. So you have to be aware that the most likely the price is going to violate these previous candles high. But I also use a 4-hour candles. This is the previous 4-hour candle, as you can see. And this is the previous 4-hour candle open. Price closed there. This is the new open. And we know that the previous candle was bearish, right? So what do we expect if the price pulls back? We want to see continuation. We know that there's a trendline liquidity above us, very big wick, and we are most likely going to see some kind of rejection. So this is how I place my 4-hour box, and inside the 4-hour box I have 1-hour candles, and inside the 1-hour candle I have the 1 minute chart, 8 a.m. open. Price trades above, sweep all of this liquidity, we go back below the 4-hour open, which means this might be the continuation to the downside. We have some previous daily lows. Overall, the trend is bearish to the downside. So how am I using these opens? We just simply observe the price, and this is your first short from the 4-hour open. We traded below the previous one, right? We swept all of this liquidity. Now we have this massive wick on the 1-hour candle. So we open up at 9 a.m. Let's see what the price does. Immediately starts to go down. We come back up. Nice big wick into this gap. This is your first possible short. And another rejection, and down it goes. The market open. The price likes to manipulate. So what do we know? We know that we are below the 4-hour open, which means the price is most likely bearish. The previous 1-hour candle has a big wick. We have a massive cap over here. We have some trendline liquidity cap, right? That the price might manipulate to the upside. Let's wait for the open, go straight into the gap, takes out the trendline liquidity. The 9 a.m. open is right over here, and the 8 a.m. open is right over there. So we have 2 previous hourly candle opens. We're respecting the open. This is where you can go short right away if you want. If you don't trust this, you can wait for another candle. And once again, you can see that the price doesn't want to close above the open, which means you can enter short again. So we can play the continuation to the downside, which is most likely to happen. So we can see that momentum is to the downside, very strong. We also have supply zone where the price broke below the bullish confirmation and the right. So this is the flip zone. If you want, you can enter another short from here to play the continuation. The momentum is already to the downside, alright, it pulls back into the supply zone, the bullish bearish confirmation candle. We get another bearish confirmation candle. If you want, you could go short from here as well and target the lows. So let's wait for the 10 a.m. The momentum is to the downside. As you can see, the previous open is over there, the new open is right. So we know that the momentum is to the downside, and this is the 10 a.m. open. We see that the price pushes up and immediately rejects to the downside. You can place your next trade to the downside and continue to and the previous daily lows. So now we wait for the price to pull back into this open because the momentum is to the downside. It had a strong closure below. It taps into the open, and here it goes. It makes the momentum to the downside. You can start trailing your stop loss, right? Let it run behind the confirmation candles. All right, the next one. Okay, this is where we get stopped out. And this is how you trade high time frame candle open.